Um, all right. Sir, Anson is asking, sir, what is your take on the current market condition situation? Can we expect another .com bubble? Um, Look, I believe, first of all, let me just say, I really don't know. And if anyone tells you they know, they're not being intellectually honest with you. And I'll tell you the reason. Because we're in uncharted territory. Most of my entire financial career, which spans almost 40 years, okay, I just celebrated my 35th professional trading anniversary, December 6th. All right, December 6th, my trading career is 35 years old. All right. So my point is this, that throughout my entire career, I've never lived through this. I've never lived through the current monetary policy that's being implemented today. In the last 18 months, the US in particular has printed 40% of the entire world's dollar supply. So think about this. The dollar as we know it has been in existence since 1913. And it has been printed every single year since 1913. So more dollars have come into existence since 1913. In the last 18 months, 40% of the entire dollar supply was printed inside of 2 years. Are you kidding me? We've never lived through that. Now, guys, when you increase the money supply by 40%, and you continue to do so, you have to realize that products and services have not increased by 40%. And so now you have more dollars chasing fewer products and services, which causes prices to rise, right? Now, particularly, an increase in money supply causes assets to rise. Why? Because the increase in money supply causes a devaluation of the money. Do you understand? So every new dollar makes all the existing dollars worth less than they were before that new dollar came into existence. It's simple economics 101. Higher supply, lower valuation of the item, right? So the dollar has been debased in the last 18 months, 2 years, 40%. All right. So when you get dollars, if those dollars are being debased, which means that in a short period of time, a dollar is 98 cents, and then it's 95 cents, and then it's 90 cents. You have to, smart people, get dollars and switch them immediately into something hard. The dollar is considered soft as it's devaluing. So you have to switch a soft asset into a hard asset that's not devaluing itself. Okay? And so this causes asset prices to go up because smart people who gain access to dollars either through debt or through earnings, they immediately switch the dollars into hard assets. All right. Those prices of the hard assets, because more dollars are chasing hard assets, the prices of hard assets go up. Okay. So we have just never lived through this. So what are hard assets? Bitcoin's a hard asset. Gold's a hard asset. Real estate's a hard asset. Stocks are harder than currency. And this is what a lot of people don't understand. Stocks fall into the harder asset category than money. Stocks are harder today than bonds. Stocks are harder today than dollars. Then stocks are not as hard as gold. Stocks are not as hard as Bitcoin, but they are hard. Why? Because their supply is limited. Okay, so you might have a lot of shares, like for instance, Apple has 16 billion shares outstanding. Now think about that. Bitcoin has a maximum 21 million shares. Apple already has 16 billion shares out there, but at least it's finite. Apple's not printing trillions of shares every single year. That's what the dollar's doing. So if Apple's not printing more shares in the trillions every year, but the dollar's printing trillions of new dollars every single month, then whenever you get dollars, if you put it into Apple, you're actually safer in Apple. And so what I'm saying is that what this does is artificially keeps asset prices high. And as long as those dollars are being printed like that, asset prices are not coming down. And in fact, if the smart people are using the system to generate more dollars, cheap dollars, because money's free today for the most part, if you are privileged, not if you're not privileged. If you're privileged, you can borrow money for practically zero and move the money you got for free into something like Apple, which is harder than the money you received. And so as long as we're in this prolific money printing environment, I don't see major cracks in equities. How? Some of that's going to go to Bitcoin. Some of that's going to go to gold. I don't know why. I mean, because I think gold is broken in the new digital era. All right. It served its purpose in an analog era, but we've left an analog world and has moved into a digital world. And so digital gold is replacing analog gold. But that's another topic. So what I'm saying is that I just can't see this. I can't see where there's still limited Apple shares, but there's unlimited dollars being printed. Those dollars are going to find their way into what is limited, because if they don't, a dollar becomes 90 cents, becomes 80 cents, becomes 70 cents. So it almost forces, there are two types of people in this world. There are those who are basically consumers that live off of the dollar. And what I mean by the dollar is fiat currency. It could be the peso, it could be the yen, it could be the renminbi, it can be, the euro, whatever. I'm using dollar as a general term for fiat currency. There are those who live off of fiat currency and are consumers for the most part. And then there are those who are investors. So the world can be pretty much divided into those two groups of people. There are other divisions, but I'm just broadly speaking, there are consumers who live off of fiat currency, and then there are investors. The investors will take dollars and invest those dollars into what is limited. Apple's limited, 16 billion shares, and they're not printing more, not at the moment. Microsoft's limited shares. They're not printing more. They're printing more dollars. So I have to take the dollars and put it into something that's not being printed more. That preserves the value of the value that's declining here is preserved by placing it here. Okay. And so smart investors are not only just earning dollars and making the switch, but they're borrowing dollars to make the switch. Those who live off of currencies, earn currency, and just live off of currency, they're just consumers. So they're being hit by two things. Number one, they're forced, because the dollar that they earn today is less tomorrow. They are forced to have a high time preference, which means that they're forced to buy something with it today, because today it's $1, but tomorrow it's 90 cents. So if you wait too long, it's 80 cents. And if you wait longer, it's 60 cents. And if you wait longer, it's 50 cents. And so this forces society to become consumers. So consumerism de-incentivizes savings. So it starts to impoverish society, right? Though the part of society who's not in the investment camp, the part of society who's just who's just a liver off of currency, they're forced to get currency and spend it. They're de-incentivized to save it because it's less and less if you hold on to it too long. In addition to that, so they're hit by both ways. They're hit by no savings. It's stupid to save in this environment. They don't invest. And if they do save and do the stupid thing, their dollars get less and less and less and less anyway. So they're getting rid of their potential wealth by being a consumer. And if they're not a consumer, they're holding on to their fiat and giving up their wealth as well. So it's a destructive trend for the masses, for those who are not investors in hard assets. And the only protection is to be an investor in hard assets today. And equities are harder than dollars. So I know it's a long way to answer that question, but it's something that touches my heart so deeply today. And I try to spread this message as much as I possibly can, because everywhere you look on Instagram and on the social media networks, the whole message is consumerism. It's to be a consumer. Everybody's got expensive purses and shoes and showing you private jets and cars that cost $500,000 to $1 million. This is promoting consumerism, and it's the wrong thing, especially today. All right. What should be taught is the switch of fiat currency into hard assets, and people should know what the hard assets are.